Every time I've said I think they're as low as they go, they surprise us.
Interest rates are sounding a lot more like a limbo contest, and that tops tonight's Your Money.
Here is News Channel 8 business reporter Joe Smith.
Good evening, Laurel and Tracy. It's the question everyone in the real estate industry is asking: how low will and can they go? Freddie Mac says mortgage interest rates for a 30-year loan are now at record lows. But now the bigger question is, will this be the answer to finally put the housing market back on track on the road to recovery?
Right? We keep thinking we're the lowest we're going to get, and then they go lower.
Well, Saturday night and I just got paid.
Not since the bobby socks and blue jeans of the 50s have mortgage rates been so low. Freddie Mac puts the average on a 30-year loan at 3.84%. A 15-year is down to 3.07.
Overall, it just ends up being a good deal for a lot of the people that have been trying to weigh whether to be renters or homeowners.
Rose City Mortgage Loan Officer J.J. Lee Kwai says today's rate on a $250,000 loan can be a huge savings over 30 years.
They're saving about $46,000 in interest.
These low rates affect the entire real estate market.
Right now, the hardest thing to do in a market is for a buyer to find a home to buy.
With only 5 months of inventory in the metro area, Peter Clark with Keller Williams Realty Group says the market is now pretty much in balance.
It is a great buyer's market, and for the first time since about 2007, it is a really good seller's market as well.
However, these record low rates don't come cheap.
So people are moving out of stocks and piling money into treasuries.
Wealth strategist Tim Phillips says a world economy torn at the seams is playing a big role as well.
You've got Europe in recession, China slowing, India's having some challenges now. Now we're seeing problems in Australia. And that's driving money to U.S. treasuries. Basically, we're like the cleanest shirt in the dirty clothes basket.
Despite the low rates, it may not be in your best interest to rush out to refi.
So people that have had their rate, even at a 5% level, for 10 or 15 years, it would make no sense for those people to refinance into a new 30-year mortgage because they'd pay a ton more interest.
Because you'd just be starting over.
Also keep in mind the average rate does not include extra fees, including points, which most borrowers must pay to get the lowest rate. 1 point equals 1% of the loan amount.